Good afternoon and welcome to the WebEx session, How Should Tax Department Help Businesses in COVID-19 Times? The session will be presented by my colleagues Nishith Desai, Rajesh Simhan, Parul Jain, Shipra Padhi and Ashish Sodhani. Please note that this session will be in listen-only mode and will last for about 60 minutes, of which first 30 to 40 minutes will be spent on panel discussion. The remaining time will be available for question and answers. Requesting all the participants to be on mute mode for the session. You can post your questions in the chat window while the panel discussion is on. The moderator will queue up the questions for the speakers accordingly. Should you need any assistance during the conference call, you can use the chat option. Do note that this conference is being recorded. I now welcome our session presenters. Nishith Desai, founder, Nishith Desai Associates. Rajesh Simhan, co-heads the tax practice at NDA's Mumbai office. He represents clients in a wide range of sectors with a special focus on complex cross-border tax and corporate structuring transactions. He has significant experience advising clients on tax issues relating to mergers and acquisitions. Parul Jain co-heads the tax practice at NDA's Delhi office. Shipra Padhi focuses on tax advisory and transactional tax matters, especially in the cross-border space. Ashish Sodhani focuses on globalization and externalization of corporate transactions and regularly represents clients before various forums, including tribunals, various high courts, and Supreme Court of India in relation to disputes on international tax. Over to you, Mr. Desai.
Yeah, thank you very much, everyone on the call and on WebEx for joining this morning. First of all, our hearts go out to all the people who have suffered as a result of COVID-19, and our sympathies are with them. It's very important subject today, and at the same time, I think we have to see how can we bring back some vigor in the system, and how can our tax department play some role at this critical juncture. As you all know, that when all businesses are making profit, when all businesses are prospering, obviously they are expected to pay tax. But when the things go bad, obvious question arises is that we pay taxes when we are prosperous. At least when we are in difficulty, can tax department help us? It is understandable that government or tax department would say that we don't have money. But I think there are ways to deal with those situations, and a number of reliefs can be granted. First of all, there must be, where would we find liquidity? Where, when the revenue streams have stopped, businesses are closed. So when the revenues stop, and at the same time, the business has to continue to pay some operational expenses or some loans and capital expenses and stuff like that, we have to have some mechanism to solve business problem. If we solve business problem, as soon as this pandemic is over, I'm sure everybody will be back with double the speed, and I'm sure that industry will also appreciate help from tax department. Number of things can be done. What can be done, right? That's the next question. What can be done? There are some simple steps government take. First is advance tax that is payable by the companies or the businesses or the other people. I think that could be provided deferral. Number one. And I understand that for TDS and some other kind of stuff, deferment has been allowed, but there is an interest of 9%. Now, 9% is still draconian in today's world because this is a non-tax deductible interest, number one. So it's almost 12% or 14%. I don't know what might be the exact number. But I think this is something too harsh still. And it is very important that, tax deferral should be permitted without any interest. And whatever base can be done, that should be done by the government. Second thing is people have to work from remote places, and therefore any tool that is needed to allow people to work from home, there should be 100% deduction, not 60%, 40%, whatever it is. So today is a time when we are asking people to stay at home in a lockdown condition. There has to be a mechanism to continue at least some degree of productivity. Initially, it may be 10, 20%. As time goes by, it will increase 30, 40%, 50, 70, And in future also, we can create a culture of virtual organization in the country so that there is less stress on the roads, on gas, on energy, on, number of things that go along with, including the travel time. So we should encourage businesses to go virtual. And, we are going virtual and we'll continue to remain virtual about 80-20%. That's a rule that we have broadly ourselves set out for ourselves. So it is very important that government grants some kind of additional, or not, I would not say, depreciation is basically a normal charge. There is no incentive. It is not something called, some extra kind of gratis that is being done. Depreciation is a regular charge. In many countries, depreciation is available 100% the very first year. Okay, in India, we have very different rates for year to year to year to year. But you have an option in some countries to write off any capital expenditure in 1 year or over a period of time. But if you can't do that, at least today, as far as remote, devices are concerned, companies and businesses should be encouraged to provide those things to the employees so that they can work efficiently from the home. And we all want to see that, companies are able to pay. So these are, there are a number of things. Number of countries have, for example, given some loans at subsidized rate. RBI has reduced, I understand, rates by 0.75 or BPS. And, some measures are being taken. We understand. We'll be discussing that in the course of the day, but in the course of the session. But, you can do a lot of those kind of things. Another important thing perhaps we can consider is carry backward of losses. In a number of countries, we have found that, carry backward is permitted. And what does carry backward means? We have concept of carry forward. Now, when businesses are prosperous, when businesses are doing good, you tax them to the best possible extent. But when businesses go down and losses begin to get suffered, how does business survive? So carry backward of losses should be immediately introduced as a concept. And another thing is there are two types of situations. One is compliance related procedural relaxations, and second is substantive law. What I spoke are more of substantive law changes, but on a procedural side, I think for all kind of compliances, at least to start with, 3 to 6 months extension should be granted without any consequence whatsoever. Okay, and that would be a great demonstration of government sympathy towards the businesses. And so we'll be discussing those aspects in the course of the session. But let me now, take it up to Parul, maybe. And Parul, what are the tax measures that India has introduced till date? I think some announcements were made by Finance Minister and some other steps have been taken. Can you just give a little summary of what has happened and what's happening currently? And then we'll turn to Rajesh. Go ahead.
Yeah, sure. Thanks, Nishith. So 3 days ago, Finance Minister announced several relief measures relating to statutory and regulatory matters across various sectors. Now, these are more in the context of compliance matters. And, there was also an indication that probably more relief is expected as the days go by and as the government really, takes stock of the situation in view of the 21-day lockdown. But on a very immediate basis, 3-4 things have been done. One is that, the last date for extension of income tax returns for the financial year 18-19 has been extended from 31st March till 30th of June. Now, both belated as well as revised returns for the financial year ended 2019 could be filed till 31st March 2020. So that has been extended, and this could bring some respite for, taxpayers who are not able to file their returns given the lockdown situation. There's also a deadline extension for the Vivad Se Vishwas scheme. Now, as we know, the Vivad Se Vishwas scheme is more of an income tax settlement scheme. And this was a direct tax scheme announced in the budget 2020 last month for settling tax disputes between individuals and tax department, business houses also and tax departments. What this scheme does is that it gives a complete waiver on interest and penalties, provided, that the taxpayer pays the complete amount of taxes. And the deadline for paying the tax was 31st of March. Beyond that, if tax would have been paid, then you could have still gotten covered within the scheme, but there was an extra 10% tax amount. This extension is a much required relief, considering that taxpayers were still figuring out whether they should opt for the scheme or not. The law came into effect from March 17th, and the related forms, etc., were just notified recently. And it just gave a very small timeline of about 10 to 12 days for people to to figure out whether they would want to opt for this scheme, and also to to get the liquidity for paying the taxes till 31st of March. So this scheme has been extended till June of 30th, and there is no additional 10% amount if payment of taxes is made by June 30th. So that's definitely a welcome move. The other thing which has been done is that for all notices, intimations, any reports that need to be filed, any time limit for completion of proceedings, which were expiring till 29th of June, between 20th March and 29th of June, those have been extended till 30th of June. What this really does is that while it extends the period for issuance of notices, any notifications or any filings or completion of proceedings, however, this should not really be looked at as extending the statute of limitation where the time period expires, let's say in November or in December of this year. And probably that's something which the government is going to wait and watch, depending how things pan out. Nishith Bhai already talked about how, there's a reduced interest rate of 9% for delayed payments of advance tax and for TDS. And these payments can now be made till 30th of June. However, there is, like Nishith Bhai mentioned, this is just a reduced rate of interest. There is no deferral there is no waiver of the reduce of the interest rate. The interest rate still needs to be paid. There are similar changes for more compliance-related changes where it comes to GST and indirect taxes, and businesses having turnover of less than 5 crore can now file their returns within the last week of June 2020 without payment of any interest, late fee or penalties. However, anyone not getting covered within this 5 crore turnover limit can file by last week of June 2020, but there would be an interest rate of 9% which would apply for the late filing. There have been some other, GST-related compliance extensions which have also, also been enacted, or the finance minister has also indicated those will happen. I think apart from what measures the finance minister has introduced with respect to compliances, it's very interesting to see how our Indian judiciary is trying to, protect lawyers and judges and the general public against the coronavirus. And different forums have taken different approaches. The Supreme Court, came out by, saying that they will hear the cases, urgent cases via VC. However, now, day before yesterday, the judges have also postponed indefinitely the hearing of the urgent cases via VC, given the 21-day lockdown, which has been announced by the Prime Minister. Accordingly, even high courts and ITATs have also adjourned only for hearing matters. The Bombay ITAT had also, issued a notification saying that urgent matters can take place over web-based video conferencing, and parties can provide their WhatsApp IDs, their email IDs, and their Skype IDs, so that urgent hearings can take place over video conference. I think one very important development that happened is that, the Kerala High Court had taken note of, the deadly coronavirus and had directed income tax authorities and GST authorities to not, really do any coercive measures and to defer recovery proceedings. And the Kerala judge actually took note that because the government is issuing recovery notices, it's compelling litigants to approach courts, and therefore, you're leaving a lot of people vulnerable to the virus. Immediately, there was an SLP which was filed before the Supreme Court stating that, by giving a kind of a deferral for recovery proceedings, this would really, make the government very difficult to run even its basic maintenance and development activities and pay salary to crores of employees. And in lieu of, in consideration of the arguments which have been put forth, the Supreme Court has granted a stay on the Kerala High Court order, but it has also said that, there's a proper mechanism that will need to be evolved to, assuage the hardships of everyone. This is more on the litigation side, but, Rajesh, I think, we would all love to hear your thoughts, given how you actually live your life in courts. How do you really see this Kerala judgment and, the Supreme Court stay, the video conferencing, and how do you really see, this to pan out?
I think, thanks, Parul. So I think there are 2 or 3 different aspects and something that we've seen on a year-on-year basis when it comes to, extension of return filing time. You've had parties going to or associations file writ petitions in various high court asking for extensions. So we've seen a similar move pan out where various parties have approached high courts for extension of time. Today, the high court, whether it's the high courts or whether it's the tribunal or Supreme Court, all of them are obviously under the whole lockdown. But having said that, what we have tried to do is that even prior to shutting down, they've tried to make it orderly. They've tried to ensure that even in terms of extensions and all, they have passed orders in terms of extension of limitation period across the board for filing of matters, whether before the High Court or ITAT. There is an order from the Supreme Court on that particular issue, whereby they have essentially extended the limitation period under all statutes. At the same time, you've had the whether it's the High Court or whether it's the tribunals have come out saying that, listen, please don't file the appeals at this point in time. Even if you do have to file appeals, we will ensure that we will take condonation of delay. We'll take the current situation into account, so don't worry about that. Similarly, on stay matters at this point in time, like what you had briefly mentioned, the ITAT was mentioning that they're willing to hear urgent matters through stay through WhatsApp or any digital means. But I think the expectation or the hope is that the government also does not, at this point in time, take any undue action or take any kind of recovery actions at this point in time, something that's a big practice the world over at this point in time. So that's really the expectation around that. What at this point in time, at least insofar as the courts are concerned, looks like at least all of them are going to be shut till April 14th as of now. We don't know whether it will get extended or not. And even insofar as urgent matters are concerned at this point in time, except in exceptional cases, not really hearing any of those matters. What I would sort of expect is that obviously once April 14 passes by, you're going to have the both the tribunals and the High Court hearing matters. Again, trying to sort of make the distinction between urgent matters and not so urgent matters. So you're going to have that coming through again. But at least what I've seen is that whether it's been the Supreme Court or the High Court, they have been proactive till now, whether it is in terms of telling the government that why don't you, while we are not going to grant in, for example, a stay on particular procedural or substantive matters, we do expect the government to take the necessary action at this point in time in order to alleviate the pain for all taxpayers. That's something that we have seen across the board. And that's been the message that's been coming in from the judiciary in terms of being proactive. I think the second aspect, while we have discussed in terms of what measures the finance ministry has come out till now, and also in terms of how the courts have approached, is also there have been a large number of changes or fiscal measures which has been brought in by the Reserve Bank of India also. I think at this point in time, let me get in Ashish. Ashish, even a couple of hours back, we had the RBI announcing a series of reliefs. Why don't you just walk us through what have been the fiscal measures which have been introduced, whether by the RBI over the last couple of weeks?
Thanks, Rajesh. I think I'll first cover what the finance minister yesterday brought about in terms of the fiscal measures that are going to happen in the next few days. Firstly, there is an insurance scheme for health workers who have been provided who in government hospitals and healthcare centers with an amount of rupees 50 lakhs for each one of them if any of them meet with an accident in relation to COVID-19. Apart from that, a number of measures were introduced for the poor in the country and for women and senior citizens. Essentially what the FM was saying was that each farmer would be given about 2,000 rupees during the month of April. There would be cash transfers made to women account holders, which would be about rupees 500 per month for the next 3 months. Under the Modi government had taken the initiative to provide gas cylinders to all poor families and move away from the old system of using wood while cooking food. Now, in addition to that, they have said that in the next 3 months, they will be providing free gas cylinders to all these families, which would be about 8 crore families that they would be covering. In the organized sectors for daily wage earners who are earning less than 15,000 rupees, the government has gone ahead and said that the provident fund that the employer and employee need to put in every month would be funded by the government for the next 3 months. This is about 24% that needs to be put every month. 24% of the salaries, monthly salaries of these workers that will need to be put in by the government. For senior citizens who are above 60 years, widows, there is a plan to give 1,000 rupees per month for the next 3 years. Overall, these benefits cost the government approximately 1,70,000 crores. And provide them with cash transfers, gas cylinders, and insurance schemes also for the health workers. In respect of other poor people, the government has also gone ahead and said that whoever is getting free grains today will be given additional free grains for the next 3 months, so that poor people who will be affected most by this economic slowdown can live and be comfortable during these times. Apart from that, earlier today, the Reserve Bank of India made a number of changes to its policies, essentially allowing liquidity to the banks, which would then in turn help the people, the companies to then dip into this liquidity. And in terms of in the next 3 months, which is going to be a period where perhaps liquidity is going to be the biggest issue, cash crunch is going to be the biggest issue, to help with that. In terms of those measures, the first measure is the long-term repo operations, which they have increased, where now the banks can invest in other forms of securities up to 25% of total investment permitted. The cash reserve ratio, which the banks need to maintain on an everyday basis, has been reduced by 100 basis points and gone down to 3%. This will give banks the liquidity power of about 1,37,000 crores. The margin standing facility, which allows banks to borrow overnight at their discretion, is also, by dipping 2% into their statutory liquidity ratio, has also been increased, and now they can dip into these ratios to about 3% with immediate effect. The other measures that the Reserve Bank has come out with is the moratorium on the term loans. So all commercial banks, cooperative banks, NBFCs, financial institutions are being allowed a moratorium of 3 months on payment of installment in respect of all term loans starting outstanding March 1, 2020. On the interest on working capital facilities, there has also been a relaxation that has been given, which will allow a deferment of 3 months on payment of the interest on such facilities. With respect to working capital financing, the banks can go ahead and recalculate the drawing power by reducing the margins. And respect of all of these measures with respect to working capital and deferment of moratorium on the term loans, the Reserve Bank has said that it will not downgrade the it will not adversely impact the credit history of the beneficiaries. Another important announcement by the Reserve Bank was with respect to banks being allowed to deal in offshore non-deliverable rupee derivative markets, which basically means that the government has now permitted banks in India which operate under the IFSC, the one that is there in Gujarat, and where a banking unit has been set up, they can participate in the NDF market with effect from June 1, 2020. This is effectively so that the rupee that has been degrading continuously can be given a little bit of a push. That's about the changes from the Reserve Bank and the Finance Ministry that has taken place over the next couple of days. We hope, and it seemed like the message from the Finance Ministry that more measures will be taken up for the organized sector, for the corporate sector in the coming few days, which we will be hopefully seeing and then sharing with you. So I think more at a global perspective, it's also important to see what other countries are doing. And at this stage, I'll call Shipra to tell us about what measures the other countries are taking. We are saying US, UK, Netherlands, Australia are doing a lot of things for the economy. Shipra, maybe you can chip in here.
Sure. Thanks, Ashish. So, broadly, given the COVID-19 crisis, there are various emergency tax measures taken by various jurisdictions who are affected by the crisis. I think we can divide these measures broadly into 3 buckets. One is, of course, in the tax filing obligations. This is something that, of course, India has also taken into account and given postponement in terms of due dates. The second is in terms of tax payment obligations, and the third bucket is in terms of tax incentives or SOPs that have been granted by the government to various businesses. So let me just take up some of the important jurisdictions where the government has brought about these incentives or these tax measures. The first jurisdiction I'll take up is UK. So UK, of course, has been greatly affected by the coronavirus pandemic. Now, in terms of payment obligations, income tax payments, including self-assessment payments, which were due on July 31st, 2020, have been deferred by about 6 months to January 31st, 2021. The taxpayers don't really need to make any application for this deferment, and this is automatic. Further, unlike India, where there is still maybe an interest, reduced interest, but an interest applicable, In case of UK, there is no interest or penalty or any additional tax amount that will become applicable due to this deferment. Similar deferment has been made even in case of VAT, and this is basically with respect to the last quarter of VAT payments. So a similar deferment has also been made in case of VAT payments. In terms of tax incentives, there is a coronavirus business interruption loan facility that has been sort of set up by the government to help businesses in cases of liquidity crunches. There is also, funding grants and other loans available to both small and medium scale enterprises as well as other corporates by the government to take care of their ongoing businesses. And lastly, I think like Nishith was also mentioning in terms of how to take care of the business losses of the current year. I think what the UK government has proposed is that there is an extended carry forward, not backward here, but carry forward of the net operating losses of this year to future years. That period of carry forward will be extended. Also, certain industries, for example, the retail, hospitality, and leisure businesses have been granted exemptions or tax holidays from business days. So this is as far as UK is concerned. In the USA, the Coronavirus Aid, Relief and Economic Security Act, the CARES Act, was passed. This also provides similar relief to taxpayers, all sorts of taxpayers, including funds, trusts, individuals, corporations, etc. From the filing and payment of tax returns, which is due on April 15, 2020. This has also been extended by 3 months, and similar provision has been made such that no penalties or interest or any other additional payments will be applicable on the taxpayer owing to the deferment. Moving on to some jurisdictions in the European Union. In the Netherlands also, similar payment system has been made where a deferral has been granted for payments of income taxes, including corporate taxes and payroll taxes. But in this case, the deferral isn't really automatic, and the taxpayer is required to make an election, letting the authorities know that due to the COVID-19 crisis, payments cannot be made, and therefore please grant me this deferment. Interest has been reduced. If there is any interest due, that's been reduced from about 4% to 0.01% to help the taxpayer. Lastly, I think another interesting move taken by the Dutch government is that a carryback of net operating losses, or carryback in this case, has been introduced to the extent of 80%. So for the current year, if your losses are 100, then of that 80 can be carried back and set off against profits made in 2019. So again, the Dutch authorities haven't really said that your losses need to be linked to the COVID-19 crisis, and it's sort of a catch-all provision saying that if you have made losses in this current year, that can be carried back and set off against profits of 2019. So that's an interesting measure taken by the Netherlands government. I think in terms of other EU countries like Luxembourg, Belgium, France, etc., similar measures in terms of deferment of tax payment obligations with respect to VAT, corporate taxes, payroll taxes, etc., has been made. I think all countries are sort of following a similar approach when it comes to deferral of tax payments. Another interesting measure taken in Australia, which is, I think, sort of unique, and I think in the tax community people are talking about it, is with respect to foreign companies who have employees or key managerial persons in Australia, and such persons have not been able to or sort of have been forcibly required to stay in Australia due to the lockdown. So in Australia, it has been proposed that for any activities relating to such people who are staying in lockdown in Australia and are working for foreign companies, there is an exemption with respect to permanent establishment, with respect to corporate tax residency owing to place of effective management. So, for example, if you are conducting board meetings in Australia due to the fact that you're stuck in Australia, that itself will not lead to a foreign company having tax residency in Australia. Similar exemption has also been given for such persons who are stuck in Australia. Their day count test will not really consider the days in such a lockdown. Of course, to take these exemptions, one has to prove that, on a yearly basis, such persons are not resident in Australia, and it is only owing to the COVID crisis that such residency has taken place. So that, of course, is a condition that has to be met. So I thought that was another interesting measure that has been taken by Australia. Lastly, I think just to cover China, because China has, of course, been affected by the COVID crisis way before other jurisdictions. So I think the incentives and the measures taken by China are a lot more stringent or a lot more diverse, I would say, as compared to other jurisdictions. There have been VAT incentives, VAT exemptions, even corporate income tax exemptions that have been granted by the Chinese government to various businesses, and especially businesses in the essential services sector, to sort of take care of the COVID crisis. And another interesting point is that in China, these, as far as postponement of due date and these incentives are concerned, there is no last date. And this is something that will be decided by the government going forward, depending on how the COVID crisis ultimately sort of pans out. So I think those were broadly the measures taken by other countries. Now, Nishith bhai, given these sort of measures taken in other countries, we would love to hear your views on how India can learn from these jurisdictions or take any inspiration from other jurisdictions. To you, Nishith bhai.
Yeah, thank you so much, Shipra, for the comparative landscape that you provided as to what other countries are doing. So apart from our own views, I think we have a number of areas where we can take some inspiration or at least emulate some of the steps that are taken by the other countries. And, so I think let us look at different segments, basically. So first segment, obviously, we have to take care of is bottom of the pyramid. So some measures can be taken to see that the poorest of the lot in the country is first taken care of. I think that's in terms of priority. Second is MSME, medium and small scale kind of industries. I think they have a tough time because, it's very difficult to understand how a small entrepreneur manages his cash flow, people, regulatory stuffs and stuff like that, and also payment of taxes or whatever it is. They don't have organized setup. We have to really appreciate what they are doing, and maximum employment, if I'm not mistaken, is currently or even otherwise created by MSME sector. So I think again that deserves a lot of sympathy. Third is a corporate sector, and I think that is where a number of issues can arise, and they generally create a lot more organized employment. They have more organized role to play in the economy and on a cross-border basis as well. So the issues that arise, we will also have to deal with them. Now, there will be two types of corporations. One, the Indian companies, and other one will be the foreign companies. As Shipra mentioned, that Australia and other jurisdictions have also given relaxation in terms of either tax residency or permanent establishment or other kind of board meetings to be held in Australia and not constituting place of effective management and stuff like that. Our law has become a little more complicated in the last couple of years. People are coming to grips with even the concepts of poem and stuff like that, So it would be very helpful if we can discuss some of those ideas. We are going to be having some more discussion later part of today, I believe at 9 o'clock on corporate tax residency and other individual tax residency in the context of COVID. But for the time being, I will ask Rajesh to make some comments on this subject as to what all can be done so that, for these segments and whether it's individual, MSME, corporate, and then we can discuss and we'll open up to question and answers after that. So Rajesh, can and I think the number of things that you can discuss, and Parul would have some comments to add. So let's go.
And let's as Nishith rightly pointed out, you have to break any kind of approach into the specific sections of the most. The announcements which the finance minister has made till now, actually look at it, it is sort of targeted towards the bottom of the pyramid, whether it is relief in respect of certain EPF payout from the government, or in terms of direct transfer of benefits of around 2,000 that would be credited on in April, or even towards the women's self-help group. So all of those payments are all targeted towards the bottom of the pyramid. And obviously, in when we have this kind of situation which comes about, the first care has to be taken towards those who have the greatest need, even for basic necessities, and which is what the government has done. Ideally, you would want them to do more, but hopefully, I think it's only the first series of measures which they have come about. The second aspect around it is that what is going to happen, whether it's over the next 3 months, whether it's over the next 6 months, is that even for any salaried professional or any other individuals, they are all going to have, just as the corporates are going to face a liquidity issue, you're going to have the same issue even faced by the salaried class or even individuals. So I think one aspect which the government has to go back and relook at is, while over a period of time we have raised the exemptions as far as the taxable bracket is concerned, we do have to relook at it, so that as an interim measure, at least whether it's for 1 year or whether it's for 2 years, raise the exemption limits significantly. I think that is something that would need to be done, if nothing else, to provide succor during hard times. We are also going to grapple with a situation as to, we don't know whether there are going to be job losses or the quantum of job losses which are going to happen. So while the government has provided measures such as saying that they will provide 25% of the salary for those below 15,000 by crediting it to the EPF accounts, the question is whether the government can actually do more. We've seen in some of the other countries where the governments are stepping in to actually make payments or stepping into the shoes whereby for employers to actually have the salaries paid of the workers and to try and step in to ensure that there are no job losses. But I think that's a critical component in terms of what the government needs to do. The other aspects which they also need to focus on are things like, what are the kind of deductions that you will make for medical expenditure? To the caps and limits, we should obviously be looking at increasing it. And the other aspect also, as far as individuals are concerned, is to try and see what mechanism can we have, so that if individuals are facing job losses, the government will sort of step in and have a social security mechanism. Because India is a country where we've always struggled on the social security aspects. While we have employee provident fund and a few other social security benefits, but they're not really enough. So in any kind of situation where people are facing cash flow, they are going to dip into savings. So that's also the other aspect in terms of allowing people to withdraw, whether from their social security or provident fund. Those are all aspects which the finance ministry has to look at. That is insofar as individuals. The second part of it are also, as Nishith rightly pointed out, are the corporates and the MSME. And Parul, let me bring you in for that, in terms of the measures that need to be introduced, at least from a corporate or a MSME perspective.
Yeah, sure. Thanks, Rajesh. I think quite a bit can be done for the corporates at this stage. Of course, the government is also doling out packages in order to address unemployment issues and, to make sure people are not deprived of their daily essentials. And so therefore, everything just, goes back to the financial stimulus and how much cash the government is able to collect. But if we notice, in the times of prosperity, in any case, corporates pay up and, but when times are bad, and when corporates are anyway, trying to go out of their way to support their employees, trying to see how much they can work from home, there are many ways in which the government can look at providing relief. One of the ways that it can be done is, permit a system of carryback of losses. I think Nishith Bhai talked about that briefly, and Shipra also talked about how Netherlands has actually, tried to implement a carryback for 80% at least. There should be a system in which where if, corporates are paying taxes in 1 year, then at least in a force majeure event like this, they, at least for 1 or 2 years, they should have an ability to carry back their losses and set off against the profits of the last year and, bring out the appropriate compliances for that. Refunds should be accelerated. We saw how the government is, trying to, make sure that there is no cash crunch in the economy. But for that, refunds need to be accelerated. What we would have also actually ideally liked to see that there is no interest which is levied on delayed payments of advance tax or TDS, but maybe, if there is another set of measures that is announced by the government will look into this as well. Also, what is important is, when companies and corporates are spending a lot in CSR, and it's already been announced that COVID-related expenses should be regarded as CSR expense, there should be appropriate tax deduction which should be available for the corporates for such CSR expense. And in addition, for expenses which do not necessarily amount as CSR. So, for example, if employees are working from home and there is expenditure in providing laptops and increasing, the level of technology where it amounts to either security or for bed-based working, corporates should be given at least 100% deduction for these extra expenses and these extraordinary expenses which are being incurred in times like these. I think the other part which really needs to be thought about is that, we just saw that the finance bill was passed by the Lok Sabha with quite a bit of changes which had been made to the budget that had been announced. And one of the important changes that had been done is for, TDS which has been applied on e-commerce operators. And this is something which, the government should look into on a very active basis. Currently, what the law is saying as per the finance bill passed by the Lok Sabha is that e-commerce operators will need to withhold tax at 1% of the gross value of all sales which are conducted through the platform. And even though the cash does not really move through the platform, and in today's times, we are talking about e-commerce, platforms trying to bring goods and essentials to the doorstep of individuals. To really add a 1% TDS when there's already cash crunch, and that too when the platforms are not really keeping the cash with themselves, it's going to be quite draconian. And I think, Rajesh, maybe you can talk a little bit about that and also, talk about, some of the other measures which you think should be done from a corporate perspective, so we can complete the discussion on the corporate side.
Sure. So let me just add in one point on the e-commerce before I just look at some of the other things which the government can do, is that today there is a mismatch between what the RBI is saying in terms of payment settlement mechanisms versus what the tax authorities think in terms of how TDS should apply or withholding tax should apply for e-commerce players. I think currently, as things stand right now, there is a mismatch between the two, and that needs to be rectified. Is this the right time for actually introducing a TDS? The answer is not really. So that's something they do need to look back at to see whether they should push it out by a few months, at least at this point in time. The other thing is that when it comes to corporates, the key here is that pretty much for the next few months, you're talking cash is king. Cash has effectively become king. So you're looking at how do you best improve the liquidity situations for corporates. Some out-of-the-box solutions in terms of what some other governments have done is to see whether you can create a business stabilization fund. In the past, we have seen the government has set up institutions which act as credit enhancement agencies. Maybe bring about a business stabilization fund concept, which will effectively act as a guarantor in order to increase or provide credit enhancement for new loans which are being taken by MSME or by corporates. I think that's something which the government should seriously consider They've done something similar when they said that, for example, the housing fund, when we are going through the housing crisis, we've set up the NIF housing fund, which will provide last mile financing. A similar concept in terms of saying that when we get out of the lockdown, can we establish a business stabilization fund which will act towards backstopping some of the corporates or MSME in respect of corporate finance? I think that's one aspect that they should consider. Obviously, issues like suspension of interest or no penalties, or circulars essentially providing for no penalties for delayed payment should ideally be issued, just so that we don't run into that issue that at the end of all of this, we just have a whole bunch of tax litigation. That's something that we definitely will want. The RBI has acted in terms of loan repayment forbearance. That was very critical in order to ensure that NPAs were not created. So that's something that's great. But there are, again, the idea behind all of these measures, whether what the RBI is doing or what the finance ministry ought to be doing, is around improving the working capital and improving the liquidity situation as far as corporates is concerned. Providing early refunds or providing refund of input tax credits. These are all measures which the government should definitely look at. I think there are two other points that I would make before I will hand it over to Nishith for any final remarks. One is that over the last 2 or 3 years or 4-5 years, we've all been around how do you plug various tax loopholes, how do you get in the multilateral instrument, how do you increase the tax base. So there have been a number of different actions which have been taken, which have taken place, both at a global level and also at a national level. I think this is the time when you actually slow down on some of those actions, because the focus at this point in time has to be on growth rather than increasing the base significantly. I think that's one broader macro aspect that needs to be kept in mind in terms of how to approach tax policy, at least over the next year or 2 years, because all said and done, while this may end up being only a 2-month disruption, but it can extend up to, we don't know, it can go up to a 4-5-month disruption. But the fact of the matter is that it has changed how you would actually view things, even from a medium and long term. So that's something that the FM has to tread with caution in terms of the rapid changes which have happened from a tax policy standpoint. The second aspect is, which I should say, is that when this also ultimately, when things settle down, hopefully sooner rather than later, this will also provide opportunities. Corporates are going to relook at their supply chain. They will move away from single country risk or try to ensure that there is no concentration in just one jurisdiction, just so that their supply chains don't get interrupted. This is going to provide opportunities. It's going to provide opportunities for the manufacturing sector. It's going to provide opportunities for the services sector. So the government should, while trying to manage the immediate situation, also think of long-term opportunities which are going to come out of this, whether in terms of how to ensure that there is an ease for companies to set up manufacturing plants or companies in India. I think those are all aspects which the companies do have to, which the government does have to look at as a broader thesis. I think with that, let me take a pause and bring in Nishith for any concluding remarks. And Nishith, I know that there's one more point before we actually that is probably close to your heart, both in terms of CSR and in terms of innovation fund, and how how the government can also look at specific aspects around it. So would love to hear your thoughts on that before we actually close.
Yeah, one more law. Okay, one more law I have is for the technology and digital business. And in fact, I wanted Parul to spend just about a minute on, on the removal of TDS or e-commerce, I think how it is impacting. and then for 2-3 minutes I'll speak on that. Parul, would you just make a quick comment, and then I'll take it over.
Sure. I think so. We talked about how there is a TDS on e-commerce operators for supply of goods, and how given the RBI regulations on payment aggregators, they are anyway not going to be allowed to handle cash. So in all probability, either they will have to hive off the handling of the cash, to another entity, or and just separate it from the e-commerce business. And so therefore, looking at the RBI regulations, the tax side of it on collecting money on one person from e-commerce operators is creating unnecessary complexity, and the issue that arises when online sales and supplies are the need of an hour in an unprecedented lockdown situation. Probably this is something which should be reevaluated by the government.
Thank you. So thank you, Parul. Thank you, everyone. I know we are not left with any time for questions, but before I finish, let me tell you that in the evening at night, 9 o'clock, we have another session dealing with corporate and individual tax residency in the context of COVID and some other issues. So you also have an opportunity to ask questions at that time. We'll make sure that you get at least half an hour at that point of time. So please welcome, please join us at that point of time, 9 o'clock tonight, India time. And there are 2 or 3 broader issues that I wanted to touch base. We have discussed a lot of tax incentives in the context of the usual businesses, stuff like that. But, there are 3 things I will mention. One, we must now quickly promote cross-border philanthropy. There is so much money waiting outside India to be put into India on a charitable basis. Today, it is more difficult to do philanthropy than doing business in India. So, all the countries in the world have come around this. We have FCRA, we have other tax issues and stuff like that. I think we should quickly look at how can we get philanthropy come to India. Whatever may be the issues, okay, we should be able to make it almost near automatic, if not completely automatic, so that, some of the concerns can be addressed. But there is no reason it can take long time for approval. And but there is one segment that we ultimately want to bring more liquidity, more cash flow, more money into India. Second is to encourage impact investing. Impact investing is the name of the game today in the investment management industry. A lot of monies are capable of being brought into the country in impact. Or, for example, third thing, even within India, CSR funds allow 10% of 2%, that is 0.2%, into the impact investing. And impact investing has become the major tool to achieve economic results, create employment, and there are a number of benefits to that. I won't go into detail. Third thing is that the entire ecosystem for trust and philanthropy, I think currently we are messing up a lot. It is very important that tax rules and the corporate rules, like currently there are some changes being suggested to philanthropy. All trust have to be in the form of companies and stuff like that. There are quite a few complications, no time to go into that detail at this point in time. But it is very important if you put in place this one, they are the immediate low-hanging fruits that India can tap. And my real urge to government will be to quickly look at a lot of recommendations have been made by us as well as other people. And if government can look into the philanthropy sector, including impact investing and stuff like that, it would be very, very helpful. We can discuss a lot of specific opportunities in this area, but that would be my last word, apart from a lot of things that have been talked about by colleagues at this point in time. So I think with those words, we'll close this session. I will request Diane to give closing remark, and then we close the thing and welcome back at 9 o'clock. Diane, go ahead. Thank you.
Thank you, Nishith, Rajesh, Parul, Shipra, and Ashish for a very insightful and educative discussion this afternoon.